Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, this weekend webinar is being filmed on Sunday, May 11th, 2009, and as I always state in my weekend webinars, I like to use the weekend to sort of step back and expand our look upon things so that we have a more of a bird's eye view or a broader view of where markets are going. We are short-term day traders, right? We're out at the end of each day, but if you don't know the path of the trees, how you ever going to cut through them to get yourself out of the forest, right? So you have to know which way the forest is going. That's what we use the weekend webinars for. We step it back a little and we look at a broader picture of what's going on. With that in mind, traders, back on January 31st, 2009, the first month of this year, last day of the first month of January, we did a YouTube video, and in that video, I brought up the CRB Index, traders, and I said, whoa, looks to me like there's going to be a run on commodities coming. My Omni proprietary moving average seems to be hovering right at the CRB Index area where it's at. The CRB Index started to get above it, and I immediately started doing videos stating that we expect commodities now to start to run higher. So, in this video today, we will discuss the CRB Index and the Omni's proprietary moving average, and of course, the commodities that have been reacting to the CRB movement and to commodity inflation, the ones that have and the ones that have not. Some of them haven't gone yet, most of them have. In fact, out of all the commodity markets that make up the CRB index, and you have 17 different commodities within the CRB's index, only 5 have not taken off yet. Live hogs, live cattle, cocoa, gold, and silver. Everything else in the CRB, the other 12 components, have started to rally. And I would like to show you a series of charts now that should illustrate to you that this market is in for a higher, the CRB that is, which means all of its components are due to make a higher move. I would like to show that to you now, traders. There's a good 12, 15 charts coming at you, so grab a pen. Maybe you want to grab some potato chips and a soda or something, because you're going to be here for a little while, because I want to teach you about what we see and how to view these charts. With no further ado, traders, let's go to the charts. Okay, traders, the first chart I'm going to show you is the very same chart before your eyes on the videos that were shot January 31st of this year, and then again on February 7th. We shot 2 videos, right? It was about this very same topic. One of them was shot or filmed on 1/31/09. The other was filmed on Feb 7th. In both videos, we were calling for a bull run in commodities because the CRB index was getting above our Omni's proprietary moving average. Now, traders, the markets that make up the CRB index, there's an energy sector, a grain sector, an industrial sector. That's copper, cotton. The meats, the softs, and precious metals, right? We are going to go through just about all of those charts now. I'll be as quick as I can, but here's a great comparison right off the bat. Here's where CRB was when we shot those videos and prepared you that there was a move coming. Note this right here. This is the 200-bar moving average. Note where that is now and how far away it is from where the market is at this point when we originally shot the video. Again, traders, just so that you're clear about it, this is the very same chart that was in the video. It ends on Feb 7th right here. That's the last date that you're looking at. Now let's go look at the comparison. Traders, is there any doubt about how well technical analysis works? Look at where we were with the chart on the left. Look at where we got to so far on this chart right now. Traders, we went all the way up to that 200-bar average, and it's above it at this point and poised for a much, much higher rally. That's the CRB index. Again, it's got 17 markets within it, and out of the 17, 12 have already taken off. Only 5 have not. And those 5 are likely to go as well, but we will trade what we see, not what we hope for. At this point, we see the CRB absolutely took off, and the components that make it up we will start to look at right now. Traders, take a look at this next chart. It's the crude oil. All right, traders, look at the crude oil. Right here inside this red box is where we filmed our Feb video. Actually, Jan into Feb, we filmed it right here. Traders, look at what has happened since. The crude is starting to go. Its target, minimum 200 bar moving average, sitting in the 70s. That's what it looks like is going to happen to the crude if it continues in the way of the CRB index. But crude is just one of many of the components in the CRB, right? If only crude moved, we wouldn't have a case here, would we? But I think by the time we're done with this video, you'll understand that it looks to me like commodity inflation is coming our way. So here's crude, right? I'm going to rip right through this chart so I can make my point, traders. Heating oil, next on the block. Heating oil was here. Now it's here. It's starting to go. Again, 200 bar moving average sitting in the 198 area, and likelihood is it wants to start heading there. So heating oil and crude going after, which is important. The CRB index made the move first, and then the crude started to finally go. Now let's look at a few more commodities here, traders. Natural gas, traders, we were here. Natural gas did not participate in the up move until recently, but right before May began, it started to go, and now look, it's beginning to get above the Omni's proprietary moving average. That's how it started for the CRB. Next stop, straight up here, most likely to the 200 bar moving average. Traders, I don't expect that to happen in a day. What I'm trying to get you ready for is slightly longer term view of where these commodity markets are going. Looks to me like the energy sector is on its way up, but there are more sectors in the CRB index, so let's keep looking. Next chart, we are looking at wheat. The grains are also a component of the CRB index. Right now, you are looking at a chart of the July wheat for 2009. Traders, right about here is where we were when we started talking about the breakout is imminent in commodities. This guy kind of went sideways, and now it looks like it's taking an elevator ride up. Got above the Omni proprietary here and is heading towards the 200 bar moving average at 636. Let's see if we get there. Again, this is where the market was when we started shooting those videos in Jan, the end of Jan, beginning of Feb for you. And as you can see, it's starting to happen. Another very interesting thing that we've noticed here was this. These red lines represent an apex or a wedge, right? We always talk about a false breakout before the real breakout comes. False breakout, back down, hits the bottom of the wedge. Major breakout takes place. You almost always get a false breakout out of a wedge before you get the real breakout. False breakout happened, real breakout, above the Omni average. I think the grains are starting to look good here, but that's not the only one. Let's look at more. Okay, traders, the next chart that you are looking at here is the corn. Corn looks a lot like wheat as far as that breakout. You had your false breakout here, and then your major breakout. Traders gets above the Omni proprietary, gets into a channel, and is on its way up to the 200 bar moving average. That sits at 453 at the moment. So as you can see, we were here when we started to discuss the breakout imminent in the commodities, and now we're here. Looks to me like we will have a run on the upside in corn as well. Traders, let's keep going. There's a lot of charts here. Next, we are looking at the soybeans, traders. This one really has moved very nicely. Gets above the Omni proprietary moving average. Of course, we were here when we discussed that we expected a bull run. We get above the Omni average and we explode through the 200 bar moving average, and on its way it is going. Look at the size move. The CRB index is a great indicator of commodity inflation if you have other indicators wrapped around the CRB to let you know if the CRB is getting bullish. Our Omni proprietary moving average seems to work perfectly on the CRB because, as you can see, the CRB is taking off and its components are as well. Let's keep looking here, traders. Copper, one of the industrials that make up the CRB index. Copper gets above the Omni proprietary within 10 days of the video, and look at the move. Wha-bam! hits the 200 bar, gets under it, gets over it, where we're sitting now, looking even more bullish. So as you can see, traders, we've gone through grains already. We've gone through some industrials. You can see we've done the energies. You can see a lot of commodity markets now are really starting to run. Don't forget, this all began the last day in Jan, first week in Feb, when we pointed out to all of our Omniacs in a video, in fact 2 videos, to tell them, get ready. Not that we're all going to buy everything and stay long, but get ready for a run on commodities. And traders, we are getting that run on commodities here. Let's keep looking. Now, cotton. Cotton's another one of the industrials, like copper, that help make up the CRB index. We were here when we started to call for the warning shot. Watch out for the commodities because the CRB's turning. And look what's happened, traders. Up, up, and away. We get above the Omni proprietary here, and then it starts to skyrocket. Now we're above the 200 bar moving average and on its way higher. So the cotton and the copper, the industrial sector that makes up the CRB, running away as we expected. Let's look at a few more charts here. Traders, coffee, one of the markets that did not really participate yet, but wow, look at the setup. Top 1, top 2, top 3. We always buy triple tops. When do we buy triple tops? After you get 1, 2, after you get the 3rd, we expect a small pullback and then the breakout above the triple top. That is how we trade triple tops. We are right at the 200 bar moving average with that triple top. We're above the Omni proprietary. I say you get a light pullback and away we go. And the coffee will have joined the other sectors that make the CRB index move higher. I would expect the coffee to be one of them to go. You have coffee, sugar, and cocoa in the CRB index, right? You've only seen coffee. Let's look at the other ones now. Sugar, traders, look at this monster. Sugar was here when we started to film those videos, the warning that the CRB was going, and will the commodities. Look at the run so far. Whoa, it's really starting to go, right? Gets above the Omni proprietary all the way back here, runs up, tests it only once, runs up again, tests it again, and explosion takes place. Remember, though, this was all keyed off of the dates of Jan 31st and Feb 7th, when we started to notice something was happening and began to fire these warning shots at you, traders. Let's look at a couple of more charts here. Traders, orange juice, baby. Look at the juice. Orange juice was all the way down here. In fact, it put its low in right when we filmed those videos to talk about the up move. Look at the rally. Get above the Omni proprietary, look at the rally, get into the 200 moving average. That is why I tell you these other markets that have not hit the 200 yet are on their way to the 200-day moving average. That is where they are on their way to. Basically, it's what happens once you get above the Omni proprietary. Markets start to take off. Traders, if this was the only video like this, I wouldn't bother filming it. I'd wait around and see if it works. This has to be, I don't know, 20 to 50 videos of this nature that we've done since we started doing YouTube videos, where we got around the Omni proprietary and then called for big moves either up or down. Well, here we are once again, above the Omni proprietary. We thought it was going to start to happen around Jan, Feb because of the CRB, and away we go. Now, that is the OJ market. Let's look at a couple of more here, traders. Okay, traders, the platinum market. Now, again, out of the metals, gold and silver did not really participate yet. I'm sure they have some life in them. But at this point, right here, we filmed our video and stated out of the CRB, the metal sector, you have gold, silver, and platinum. Well, platinum really took off, traders. Up, up, and the way the platinum is gone, comes down, tests the Omni proprietary, and on its way back up again. Traders, that is a lot of markets, traders. We are talking about 12 out of 17 markets that already have taken off and are heading higher. The ones that haven't quite gone yet, live cattle, live hogs, cocoa, gold, and silver. But you know, traders, when I look at that cocoa chart, it had such a monster move, I don't even know how to fit it into this mess. So cocoa actually did really go. I thought I was going to have a cocoa chart to show you here, but I omitted it. But in any event, the cocoa looks very strong here as well. That would be part of the softs sector. So traders, kid you not, the CRB Index, the one that I showed you in the beginning, is really starting to work its way higher. And if the CRB Index is going higher, how could the 17 components that make it up not follow? They have to follow. So get ready for more of a run on commodities, traders. Pull your charts, do your homework, pull out the CRB Index, pull out all of its components, and see if it matches my homework, traders. Whoa, baby! So traders, did you see those charts? You know what? More important than the charts, check this out. The new jacket. Look at the Omni in the back. Yeah, baby, go Omni! But aside from that, we got something better for you. Traders, those charts, I mean, they speak volumes. Am I wrong? How could you not pay attention to technical analysis? It works so well. We're talking the first month of this year we were able to see this coming and forewarn you. Then a week or so later, we did another video about it. And now a month or so later, we're doing I guess a follow-up to that video so that you can catch some of this. Traders, I don't think we're a third of the way up in these commodities. I think we have a long way to go here. So slowly, you might want to start looking at these charts and finding some of those commodities, if you're a long-term trader, to hang on to. We're short-term traders. What's nice about that is knowing where those commodities will go or should go. No one knows where they will go, right? Gives us the chance to get in and get out on advantageous days or nice pullbacks. We can jump in, jump out, and have a good day trading them. Again, step back and look at the forest in order to get your way through the trees. That's what this video is about. Now, traders, interestingly enough, and I really, really respect this paper, by the way. Kudos to you. But in Barrons this weekend, in Barrons, on page M14, an article completely opposite of what I think. The article says hyperinflation may be overhyped. And the whole article is talking about how the commodities aren't going to make the run and not to worry. And I say, you're better off listening to the charts than anyone who prints anything in any newspaper, because the charts are always right. The fundamentals come out in the charts first. The charts show you what's coming next. They are always right. So it's okay to read all the papers like I do, but some of it you just have to say, wait a minute. Did they even look at the charts before they wrote this, or are they writing this purely on fundamental news and their own opinions? Again, I really respect Barrons. I am not trying to bad talk Barrons. It is a great paper. I read it constantly. But that article caught my attention because I'm in the middle of studying for a weekend webinar. My webinar is going to be about the run on commodities. And I read an article and it's like, Oscar, it's not going up. And I say, good thing for charts, right? All right, traders. Now, what else do we got going on? The dollar versus euro. Traders, the beginning of March, we talked about the dollars topping out, the euro bottoming out, and the stock market for maybe short term, maybe forever, bottoming out as well. Again, I'm not standing here calling absolute bottom. What I am saying is right in the beginning of March, we noticed the dollar index peak out and start to come off, and the euro currency start to go up. Traders, here's the catch. The Fed wants our dollar to go down. I don't care what anyone else has to say about this. You read the charts, you will see the Fed needs our dollar down to get our stock market up. And take my word for it, the dollar is going to head down over the next couple of months. Now, being that we're day traders, that opinion can change day to day depending on if we need to buy or sell to get through the day. But a larger step back a little opinion, dollars down, currencies up, stock market continuing higher. Now, traders, the one hurdle left in our way, the head and shoulders off to the left on the chart of the S&P. You've been hearing me talk about this for weeks on end. We're finally testing it. The 200 bar moving average is right there at the highs where the head and shoulders is. If we can get above that, which is slightly higher than where we are now, somewhere in the 930s, 940s, if we can get above that, I think we got a bull run coming, traders. That is our final hurdle of this portion of the S&P move. And if you ask me, it revolves, 90% of it revolves around the US dollar going down. That is what I think will be happening over the next few months. Again, thank goodness we're day traders. Our stops are in. We're out at the end of each day. So if that changes, we can change with it. But I stick to that opinion at this point in time. And again, I will mention in this video, like I have for the last 10, at least 10, we are official buyers of dips in the S&P and in the stock market unless we fail at this head and shoulders. That's a whole other video. But for now, this is the weekend webinar. It's about the CRB. It's about commodity inflation. And here's what ties those two things together. If the CRB is going to go up and commodities are going to have inflation, the dollar is going to go down because they work like a scale. Like this, right? Dollars and then commodities. Dollars, commodities. If dollars are going down, commodities are going up. If dollars are going up, commodities are going down. That is the relationship. So how does that tie in? We need the stock market to move higher. To get that to happen, we need dollars to move lower. The CRB just showed us that it looks like dollars are moving lower because most of the commodities or the components that make up the CRB are moving higher. Traders, all these markets together create a symphony. If you listen to that symphony, you will hear it, you will see what's going on in the charts, you will know what likely is coming next. Okay, traders, I really hope that these webinars are helping you, especially with the longer-term picture. That's why we spend all this time getting ready for you on the weekend and presenting the longer-term picture to you. All right, traders, I think I'm getting out of here. That's enough homework for me. I got plenty more to do before these markets open in a little while. Don't forget the Mandalay Bay. The show starts tomorrow, right? Tomorrow's setup. And then Tuesday, you on the X can come and join us at the Mandalay Bay. That's 11th through the 14th, although the 11th is a setup day. 12th, 13th, and 14th, you can be there in our booth hanging out with us. And I have a speaking engagement on the 14th at
10:30 a.m.
10:30 a.m. in Exhibit Hall at the main stage. I will be doing my seminar. Make sure you're there. All right, traders, give me a call anytime during that, 702-629-4755. And don't forget, keep your stops in no matter what you trade. Place your stops. Place them first. A stop is your best friend. When you place a stop, it helps you keep your emotions out of trading. And one of the best ways I can help you do that is to tell you to say this to yourselves every morning, every afternoon, every evening, because it'll help keep your emotions out of trading. And you know what that is? Stops are in! Emotions are out!
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.